Hi everybody, this is Alan Ellman, the Blue Collar Investor, and welcome to this BCI podcast number 27 titled Using Mean Analyst Rating, MAR, M-A-R, in the Stock Selection Process, adding institutional components to the screening process. Now, those of you familiar with the BCI methodology know that we have a three-pronged approach to screening for stocks for option selling. First, fundamental analysis. Second, technical analysis. And third, common sense principles, like minimum trading volume and avoiding earnings reports. Now, in 2019, we incorporated MAR into the screening process to add an institutional component, thereby enhancing the quality of our reports. So let's first define the term mean analyst rating, MAR, and we'll start with what exactly is an investment analyst. Well, it's a financial professional that evaluates financial and investment information to ultimately make buy, sell, or hold recommendations. We've all heard this. It's a buy, it's a sell, it's a hold. Well, most of these decisions are made by these investment analysts. Now, what they do is they research financial statements. They listen in on conference calls, and they speak with managers and customers of the business to assist in making these final determinations. Now, the MAR is the average rating of all the analysts that follow a particular security. Now, the scale of ratings from these analysts have changed over the years. It used to be simply buy, sell, or hold. Well, now that's expanded into 1 through 5, 5 being the worst, and that would be a sell rating, would be a 5, and it's a bearish outlook. So if you were to define 5 at this point in time with the new ratings, it would be a strong sell. Now, the second from the worst is a 4, which is a moderate sell. Another word for that would be an underperform. So it's a stock based on analyst studies that they expect to underperform the market. Now, right in the middle is the hold or a neutral outlook on a particular security. So don't add to the position and not necessarily to delete from the position. Now, the second best is a rating of 2, where the stock is expected to outperform. So that's also known as a moderate buy or accumulate. And finally, the highest and best of all the ratings is a 1. And that's a bullish outlook on the stock, and it's a strong buy rating. So number 1 is the best, and number 5 is the worst. If we were to break down the categories and we received a buy rating, then we would tend to have more of an inclination to pick up more shares of that particular stock. And a sell, if we had it, we would tend to shed ourselves of some of these shares or all of them, or just not buy it. And hold, again, means not to add or subtract from our current holdings. Once again, underperform, we would probably avoid stocks with that underperform rating of 4. And outperform, stocks with a rating of 2, we would be inclined to purchase or accumulate shares. Now, there are several resources where you can access MAR rankings. I'm going to give you 2 free sites where you can access this information. One is www.finviz.com. Just put in the ticker symbol for the stock that you're looking at. For those watching this podcast, I put in Apple at the time that I made this screenshot, and then at the lower left portion of the stats, you will see it says RECOM for recommendation 2.0. So it's an outperform rating, and it's almost a bullish rating. It's the second best of all the ratings. Now, another site where you can get this information for free is www.finance.yahoo.com. Once again, put in the ticker symbol, and then you will see on the right-hand side of the page where it says recommendation trends. Once again, this was for Apple, which had the same 2 or buy rating. Remember, 1 would be a strong buy. Now, in our BCI Premium stock reports, we also add MAR to our screening process. And it's kind of in the middle of these report pages. Those of you watching this podcast, we've highlighted the MAR ratings in brown cells. And you could see that all of the securities that passed or are eligible have MAR rankings of 3 or lower. So between 1 and 3. Anything ranked higher than 3, we would not consider as a good option selling candidate security. So let's just summarize this now. Analyst recommendations can be used to add an institutional component to enhance the stock screening process. We're always looking for ways to make the screening process even better than it has been over the years. Now, by incorporating the mean of all the analyst ratings, we can get a fair assessment of expert opinions. We're not depending on any 1 or 2 opinions, but rather an average of all of the analysts' opinions. And I want you also to keep in mind that the MAR, even though it definitely enhances our screening process and increases the chances of successful returns, is only one of many components that we use in the BCI methodology for screening underlying securities for short-term option selling. So we never hang our hats on any one particular parameter, but rather we paint a mosaic of several different parameters based once again on fundamental, technical, and common sense considerations. Now, for more information on option selling, visit our store at www.thebluecollarinvestor.com/store. We have multiplicity of books, DVD programs, calculators, trade planners, and much, much more to enhance the level of our knowledge relating to option selling. We also have a premium membership where we produce these reports and save you the time of screening the stocks yourself, which include a stock and ETF report and a blue chip Dow 30 report, along with hundreds of educational videos and so much more. So just go to the website, www.thebluecollarinvestor.com/membership, and you can download the file, which will explain all of the member benefits. So I want to thank everybody for taking the time to listen to and or watch this podcast number 27, using mean analyst rating in the stock selection process. I hope you enjoyed it, and most importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.